Business email compromise is the #1 cybercrime by financial loss in the United States. $2.9 billion in 2023 alone. And the attack that drives most of those losses doesn't require hacking a single system. It requires one employee to wire money to the wrong account because they trusted an email. In this video, I'm going to give you the one rule that stops this attack cold. Every time. I'm Yuri Zhurov, cybersecurity consultant and founder of SMB Cybersecurity Advisors. Let's get started. Here's how a wire transfer fraud attack works in practice. The attacker either compromises an executive's email account or creates a lookalike domain. For example, replacing the letter O with the number 0 in your company's domain name. Then they send an urgent wire transfer request to someone in accounting or finance. The email looks legitimate. It comes from what appears to be the CEO or a senior manager. It creates pressure to act immediately and asks for confidentiality. The employee, wanting to be helpful and responsive, initiates the transfer. By the time anyone realizes what happened, the money is gone. And wire transfers are nearly impossible to reverse. Business email compromise, BEC, is not a new threat. The FBI has been tracking it since 2013, but the scale of losses continues to grow. In 2023, the FBI's Internet Crime Complaint Center received over 21,000 BEC complaints, with adjusted losses exceeding $2.9 billion. That's more than ransomware, more than phishing, more than any other category of cybercrime by financial impact. And small businesses are disproportionately targeted because they typically have fewer controls, smaller finance teams, and less formal approval processes for payments. The wire transfer rule is simple. Any wire transfer request, or any request to change banking information for a vendor or employee, must be verified by a direct phone call to the requester, using a phone number you already have on file, not a number provided in the email. That's it. One rule. The phone call does not need to be long. 30 seconds. Hey, did you just send me a wire transfer request for $23,000? If the answer is yes, proceed. If the CEO says, "What? No, I didn't send that," you've just stopped a fraud attack. This rule costs nothing to implement. It requires no technology. It requires only a written policy and one conversation with your team. The wire transfer rule applies to 4 specific scenarios. First, any wire transfer request received by email, regardless of who it appears to come from. Second, any request to change the bank account number for a vendor payment. This is called a vendor impersonation attack, and it's extremely common. Third, any request to change direct deposit information for an employee's paycheck. Fourth, any urgent payment request that asks you to keep it confidential or bypass normal approval. If any of these 4 scenarios occurs, the rule activates. Call to verify before taking any action. Let's look at a real scenario. Your bookkeeper receives an email that appears to be from you. Sarah, I'm in a meeting and can't talk. I need you to wire $23,500 to this account by 3 p.m. today for a vendor payment I promised. Please keep this confidential. I'll explain everything when I'm back. 4 red flags are present. The sender domain is slightly different from the real one. The request is urgent with a same-day deadline. The sender says they can't be reached by phone, and it asks for confidentiality. The wire transfer rule response. Sarah picks up the phone and calls you directly, not replying to the email, but calling your actual number. If you didn't send the email, the fraud is stopped. No technology needed, just the rule. Implementing the wire transfer rule in your business takes 3 steps. Step 1, write it down. Add 1 sentence to your financial policies. Any wire transfer request or banking information change received by email must be verified by a direct phone call before action is taken. Step 2, tell your team. Have a 15-minute meeting with everyone who handles payments. Walk them through the rule and 2 example scenarios. Step 3, practice it. The next time a legitimate wire transfer comes through email, have your employee call to verify anyway. This builds the habit before an attack happens. The full policy template is in Chapter 5 of the Owner's Handbook. Here's your quick reference. The wire transfer rule. Verify any wire request or banking change by direct phone call before acting. 4 trigger scenarios: wire transfer by email, vendor bank account change, employee direct deposit change, urgent confidential payment request. 2 things that do not count as verification: replying to the email and calling a phone number provided in the suspicious email. 1 thing that counts: calling a number you already have on file. The entire rule fits on 1 index card. Print it. Put it next to every computer that processes payments. Chapter 5 of the Free Owner's Handbook covers the wire transfer rule in full, including the 1-page policy template, the team training script, and 3 real scenario walkthroughs. Download it free at smbsecurityadvisors.com/framework. No registration, no email required. Subscribe for a new video every week. All free. Next up, AI voice cloning scams. The new variant of wire fraud, where attackers use artificial intelligence to clone the voice of your CEO and call your finance team directly. It's happening right now, and small businesses are the primary target. See you there.